What is going on, investors? My name is Emmanuel, and ChargePoint shareholders, we are eating today. We are up 15% on the day alone, and it's for good reason. Joe Biden's infrastructure plan is now starting to leak, and under the $2 trillion infrastructure plan, EV charging system plays a key role in this infrastructure plan. So in this video, we're going to go through this article and look at some of the key points that I think will benefit ChargePoint going forward. And I also want to highlight a particular sentence from our recent earnings call, and I think this is going to be huge for ChargePoint shareholders. And lastly, we'll take a look at the share price and determine whether now is still a good time to buy. So before we jump into all of that, make sure you smash the like button. And if you're new to the channel, make sure you hit the subscribe button and the notification bell if you want to see more video content from me. Plus, if you want to join my Discord group where we have a channel dedicated for ChargePoint shareholders, then you need to join my Discord group via the Patreon link in the description below. However, I would wait till the 1st of April so you get a full month's membership. So with all that said, let's dive straight into it. Okay, so the article was released by CNBC earlier this afternoon, and it says Biden wants to build a national EV charging system under the $2 trillion infrastructure plan, but it won't be easy. Now, some of the key points are charging stations for electric vehicles will be part of the $2 trillion infrastructure bill being pushed by the Biden administration. And this is something we already knew from last year. Throughout Joe Biden's campaign, he was pro climate change. He made it very, very clear. So it's no surprise that he's pushing the expansion of the electric charging station network. It's going to take more than the government support to successfully expand the EV infrastructure. Alex Partners estimates $300 billion will be needed to build a global charging network to accommodate the expected growth of EVs by 2030, including $50 billion in the US alone. Now, further in the article, we get a lot more details, promising to have at least 500,000 of these devices installed across the US by 2030. Now, this is going to benefit ChargePoint in a great way because who has the largest EV charging network in the US right now? And according to myev.com, it's ChargePoint. Headquartered in California, ChargePoint is the nation's largest charging network with more than 68,000 charge spots, with 1,500 of them being level 3 DC fast charging units. And also with our unique pricing for our partners, the company allows the property owner where the charger is located to set the charging rates. Many of their stations are free to use, with the owner, which is usually a retailer, for example, absorbing the cost. Registration is free and charging can be enabled via a ChargePoint card, the company's smartphone app, or a tap to charge enabled phone. And the thing is, it's not just exclusive to the US, because in the UK, InstaVolt is one of the largest partners with ChargePoint right now, and they have been rolling out new ChargePoint stations in a lot of the local retail areas and also in places like KFC. They've struck deals with McDonald's. And when you zoom in there, I don't know if you can we zoom in? No, you can't zoom in, but right there is the ChargePoint logo. So as much as ChargePoint is one of the largest charging station networks in the US, they are making headway in the UK. And it's no surprise, on ChargePoint's website, they claim to be the largest and most open electric vehicle charging network in the world, with more than 20,000 charging locations. So with Joe Biden's plan to have over 500,000 of these devices installed in the US by 2030, bear in mind it's 2021 already, so it's got 9 years. Who's he going to go to? He's going to go to the largest operator in the world right now, which is, of course, ChargePoint. So that's one of the fundamental reasons why we are doing extremely well today. And one of the reasons why we are up 15%, which is very, very good. So I started buying ChargePoint when it was still a SPAC. We was merging with Switchback Energy Acquisition, SBE. And we started buying at around $19 a share. I have averaged up, but because of today's move, we are now sitting nicely in profit. And judging by all of the rocket emojis in my Discord group, I am not the only one that's eating right now. A lot of us are eating right now. So this is Lou. He's got an average of $22.95. He's up 12% on his position after today's move. And it's very, very good to see. So we love to see it. We absolutely love to see it. Now, some more information regarding ChargePoint. So we had our earnings on the 11th of March, and I'll be honest, the earnings weren't great. They weren't great at all. Considering the amount of growth we've experienced within the last year, I expected more from the earnings. Now, before we go into the key point from the transcript, Let's take a look at some of their earnings. So their revenue for the fourth quarter that ended January 31st, 2021, revenue was $42.4 million compared to $43.2 million in the fourth quarter of the prior year period. So that's not great. Revenue has taken a slight decline. But again, you do have to remember all of the challenges that a lot of businesses faced in 2020 with regards to the Rona. It's not a huge surprise that revenue did fall. But for the fiscal year that ended January 31st, 2021, revenue was $146.5 million, which is up from $144.5 million in the prior year period. So not too bad. And if you're looking at the gap, the gross margin was 21%, which is up from 20.4% in the prior year's fourth quarter. So again, a little bit of growth in the gross margin, which is okay. Not a major amount of growth, but I do expect to see massive growth this year from ChargePoint. Fourth quarter GAAP net loss was $90.7 million compared to $33.8 million in the fourth quarter of the prior year. You don't want to be seeing that, especially in a company that I consider to be a growth stock. And again, it was primarily due to a change in the fair value of the company's redeemable convertible preferred stock warrant liabilities. Fourth quarter non-GAAP net loss was $33.6 million compared to $32.5 million in the prior year's fourth quarter. And from a liquidity point of view, as of January 31st, cash on the balance sheet was $145 million. At the close of the business combination on February 26, 2021, cash on the balance sheet was $615 million, which is incredible to see. I do love the fact that we have strengthened our balance sheet, especially from a cash perspective. That's very good to see. Now, here is the key point from the recent earnings call transcript. So it was a statement from Pasquale, and he said, "We created one single complete product portfolio of solutions for nearly every segment of EV charging." So he's talking about your commercial, your fleet, and your residential. "Today, we are both a pioneer and an established leader in EV charging with proven technology, top-tier customers, and more importantly, our business model is capital light." That is music to my ears, all right? That is music to my ears. We've 71% market share of the network level 2 charging in North America and thousands of commercial customers, including many of the Fortune 50. So that statement alone says it all. He's saying we are at the forefront. You know, we are not only the pioneers, but we are already the established leader in this EV charging game. And I love his confidence. You know, it's very good when you hear so much confidence from the CEO. And the fact that we have a 71% market share of network level 2 charging in North America is very good. Now I've heard people argue online that level 2 isn't the best, but in my opinion, level 2 is not going anywhere anytime soon. And ChargePoint clearly have the lion's share. Now, let's take a look at the share price action, okay? Because it hasn't been great. Okay, we've been on a decline pretty much since December last year, and the decline was only accelerated in early March due to the earnings, because again, the earnings were not great. We are currently down 60% off our 52-week highs. However, if we do eventually return back to our 52-week highs, that represents an 81% return on your money. And I think this is the catalyst in the short term that would do well for ChargePoint. However, we do need to start seeing some solid numbers. Now, we're up 15% today, and I think, you know, the news of Joe Biden's commitment to EV charging stations is a nice short-term catalyst. However, I don't think that's going to be strong enough for us to break the $30 resistance, and that's simply because our earnings was weak, okay? So my price predictions are, I think we're going to consolidate between the $20 and $30 range. We could test the $30 resistance and push back, or we could retrace back and, you know, hit support at $20. But I do think we need some solid quarters, you know, Q1 2021, maybe Q2. If these numbers are solid, then I think we'll be able to break our resistance at $30 and continue higher. However, in the short term, I do see us consolidating between the $20 and $30 range. So if you are considering investing in ChargePoint, I don't think now is too late. I wouldn't necessarily buy today because it's a green day. I prefer buying on red days. So if you are bullish on ChargePoint long term, then potentially wait for a red day. I don't think this is going anywhere anytime soon. Yes, it's great we're up 15% today, but that's clearly just short-term excitement from investors. So I think potentially wait for a red day, do some more due diligence. Have a look at the recent transcripts because I think the transcripts provided a lot of useful information. Take a look at their financial highlights and also scroll down and take a look at the income statements and the balance sheet as well as our cash flow statements before making your decision. What I'm trying to say is there is no rush, okay? I don't think there's any rush. But again, none of this is financial advice. Please make sure that you do your own due diligence and your own analysis before you decide to invest in any stock or any company. Remember, I am not a financial advisor. If you do want to learn about investing in stocks, there are some useful links in the description below. Don't forget to smash the like button, hit the subscribe button and the notification bell if you want to see more content from me. Thank you so much for watching and I'll see you in the next one. Peace.